Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. We've got Tesla breaking out. We've got Apple, Amazon breaking out. GE, it's being talked about in the chat right now. Dennis says you just can't be long it. We've got earnings from DKS and DSW. Of course, we'll talk about this, maybe the end finally of this Broadcom, Qualcomm deal. I don't know. Our guest today, Nick Chahine, joins us at 8:35, and then at 9 a.m., we are joined by Gil Beyda. He is the managing director at Comcast Ventures. He's going to talk us through a couple of recent investments in blockchain they've made, why they've made it, what they're going to do with it, and how they pick the good blockchain companies from the bad ones. Joel, how are we doing this morning in the S&Ps?
We're in the green by 5.5 handles here, trading at 27.9450. Made that low right off that 6 p.m. open at 86.25. Don't get too excited if we take that out. 83.75 was Monday's low, coming on the upside. Pre-market high 96 even, and you get above that. You have the intraday high from yesterday at 02.25. Monday's high, that's your big number, 28.05.25. We are looking at Bitcoin, sold off hard at the end of the day on Monday, but now back clinging to the $9,000 level. Crude down a dime at 61.26. Gold in the red by $1.70 at 13.910. Silver in the red as well by 3 cents at 16.50. And let's bring in our stuffy Triple D. Triple D, how you doing today?
You're on mute, Dennis.
Yeah. I'm on mute.
Right.
I can't do anything today. Okay. I got another wave of this cold, and I tell you, it's a rough one. I was feeling great over the weekend. I was like, oh, I've kicked this. I'm feeling good. I was out doing stuff. I'm feeling great. And it just hit me yesterday in the afternoon like a ton of bricks again. I'm wondering if I've got a sinus infection or something now because I'm all stuffed. I've got a headache, and my sinuses are just killing. So one of those things, Joel, it's, you think you're over it, and then it just gets you again. So I'm going to fight through it here for you guys today, but I'm struggling.
All right, Dennis, 8:30 CPI number. Okay, so you can have.
You got to be ready for that one, too.
Yeah, I mean, that's what's been moving the numbers, has been the worries about inflation and whatnot. So we'll let you hop off 8:26, 8:27, and maybe get some action.
I don't know, when your sinuses and your brain's not fully functioning, is it safe for me to trade that CPI number? You're going to be fast on that stuff. I don't feel fast today.
Yeah.
I feel slow. I could be the guy to pick it off again.
Take off the Lions hat and just go with the Michigan gear, and you'll be
I'll Detroit today.
Quickly, just from Texas, Linda. Andrew Left tweeted, short Netflix, do you think it will continue to drop? Boy, oh boy, let's see what happened. I don't know. Maybe Andrew's going to get stuffed on this one. They did hit it yesterday, but we're trading up in the pre-market session by $1.95. It's had a big run. What I would say, Texas, Linda, is usually you get a little bit more of a punch, right? When to the gut, when Mr. Left comes out with these kind of predictions. So I would say the fact that it's just, you didn't have the big swoon, then I don't know. He might lose out on this one. Also, it's a big stock. Sometimes he picks on these, these little stocks, low flow. They go up on big volume. He's fighting the big dog here, Dennis. How much?
And he just said 300. It wasn't like he was saying this thing's going back to 50 or something like that. It wasn't a crazy call. I mean, he's using his influence to make money, and it's not only him making money, obviously. It's his friends, too, because did you see what time? So that tweet came out at 9:53. That stock started selling off right from the open, and it was selling off hard. And it sold off $8 from the high of the day before the tweet came out. So is he telling all his buddies, yeah, I'm going to tweet about this, and they're all hitting into the open market and making money off it too? I mean, this just, is starting to get a little bit tough when you see something sell off 8 points. What's the news? And then a tweet comes out from Citron at 9:53. Did he say, maybe I'll give him the benefit of the doubt, did he say something publicly somewhere else? Because I looked at what time the tweet was. I looked at the tape of the trading action, and it was selling off for like 10, 15 minutes before that tweet came out. Was there something else?
Well, he also went on CNBC. That tends to happen a lot where he'll tweet.
Was CNBC? Well, okay, so question. Was it on CNBC? Did he say that before the tweet?
No. He tweeted at like 9:57.
9:53 was the first we heard about this. But look at the tape, Joe. Look what time it started selling off at.
Dennis,
we see this all the time.
Dennis, you get mad at me for my conspiracy.
It's not even conspiracy though. It's flat out, it's flat out. A lot of people knew that was going to get tweeted. Now that it's not inside information because it's just an opinion. So I think it's legal, but it's dirty. Is it not dirty?
You know me.
Like, is it not dirty if you know how much influence you have? You tell all your buddies, they go out and hit the thing, and then you tweet it, and then obviously it continues to fall there. I mean, really, it actually, when he tweeted it, was already down to 327. It didn't even fall that much further after he tweeted it. So it was already out there. Maybe he said it somewhere else, but it looks dirty. I think it's legal because it's just an opinion, but it seems dirty to me.
For what it's worth, his reasoning is kind of the same reasoning that Michael Pachter has said on our show several times. He's kind of like the lone bearish analyst on the street, and he said the same thing. Netflix doesn't actually own their content, right? They not like Amazon, not like Apple. So they don't have, in Left's words yesterday, they don't have a moat around their company like Amazon does. And I think he just thinks it got ahead of itself. So he sees
it's fine to have an opinion too, but I mean, he's got such a good gig there. And we know that, and he knows it too. I mean, he could come out. There's no way the stock's going up after he tweets that. I mean, you can literally, and they do this, and he's not the only one that does this. I mean, everybody gets, even Warren Buffett gets the Warren Buffett pop. These guys are up 3-4% in their positions just because they took them. I mean, that's the nice thing about having as much influence. So congratulations to Andrew Leff for building himself that much influence. What I don't like is the thing selling off so much before, because I'll tell you right now, Warren Buffett isn't going out and telling all his buddies, hey, I bought this. And, it's going to get disclosed here. You should be getting in. At least I don't think you would do that. But I just think it's dirty. That's all. So that's the last I'm going to say about it. But when I see a stock down to 15 or 7-8 points, 15 minutes ahead of the tweet, and then it comes out, it's like, just leaves you a little bit of a bad, taste in your mouth.
Rob Hood wants to know why the mainstream media does not point out exactly what we just did, showing the timelines of both the soft. Didn't CNBC? Go ahead.
Well, they don't look at the tape. People they don't know how to read the tape. Reporters, they're not sitting there looking at the tape. I went and looked at the tape. You can grab. A lot of people don't even have. You have to go to the history of your time and quotes. Go and see what was happening, and you can see. Okay, tweet came out at 9:53. I can see all these trades going straight down. The stock was literally going straight down since the open. So I'm speculating, obviously, that he's told all his buddies. Maybe it's a coincidence, but Netflix has been going straight up for days and days and days, and now it sells off 8 points. And then all of a sudden a tweet comes out. It doesn't seem like a coincidence to me. So
who's to say?
We've had Andrew Left on the show before, and he's a pretty decent guy. It's just it reeks of you telling your buddies.
Well, who's to say it's not like an algo, that is scraping Left's Twitter feed? And
when you
the Twitter feed it's nothing on the Twitter feed yet, though, Spencer. That's my argument. It wasn't selling off after. It sold off a couple bucks after. It sold off 8 points before the tweet. So are they scraping his brain? I don't know.
When you mention tape to these guys on CNBC, they think Scotch tape, masking tape. I mean, they're
not looking at that.
All right, that was our 13-minute talk on Netflix. Let's
talk. The question was, do you see it continuing to go down? I don't know. It seems like every time these big stocks pull back, they're just buying opportunities here. So am I coming here and short Netflix now? From a valuation perspective, I agree with Andrew Leff. I think it's been overvalued for a long time, but stuff just keeps going. I mean, here's Amazon too. You can argue it's overvalued as well. It's up another $10 a day just because it's a Tuesday. I mean, it's the same stocks that continue to drive us higher and higher and higher. And what's going to derail that? Reuters called me last week, and I'm quoted in Reuters, you can see it, and that's what I said on the tech rally. They're like, are you getting concerned here? We're getting lofty. I'm like, what's really going to derail this tech rally? Everybody wants tech stocks. Some of them are pretty cheap. I mean, you talk about a stock like Micron, and I mentioned that too. I mean, last week, it's got a PE going for it. If they really make $12 in 2019 or $10 or $11 in 2018, the PE is like 6. It's cheap. So that's why, these things just keep going. Micron's up another $2 today. Kramer pumped it last night. I mean, everything is so influenced right now. And it's a lot to do. It's really a retail-driven market. And, people will say retail doesn't move price. I will say they are flat out wrong, because last night, Kramer on Mad Money pumped Micron and Intel. He said these are the 2 stocks you want to own. He said the AVGO deal he doesn't see happening, with Intel potentially buying AVGO, and it's a buying opportunity. As soon as he said that, as soon as Mad Money, as soon as Jim Cramer said that, stock went from 51.60 up to 52.20, like in a matter of like 2 minutes. This is Intel. So Cramer, on all the retail traders that are just listening to him, pumped this thing up 60 cents just on that. This is Intel. Like, that's worth more than an upgrade. So it's incredible how many people just watching Mad Money and then just, do it. And this just shows you when you're in a retail-driven market. If, you're in normalized markets, you're not going to have that kind of influence. But retail trader is driving price right now. It's the fear of missing out. They're driving the same stocks again and again and again. You can tell when I'm sick. I'm always wound up. But the same stocks are getting driven. And, I mean, what's going to derail it? I don't see what's going to derail it. Even when you get bad news, it seems like it gets shrugged off.
I would just say that the last time you were this fired up, Dennis, about a retail-driven market was like the end of January. So, and what happened after that? It just seemed like
what happened after that? Eventually, you're right. I've been fired up about a retail-driven market for years.
No. I know. I'm saying the last time you really were this fired up about, you went on a rant about, just retail, nothing. How we're so influenced over just everything. What's on Mad Money tonight? Whatever, it doesn't matter.
You gotta watch it. I mean,
I'm saying
it's unbelievable that somebody can mention an opinion on a stock and the thing can rally 1.5%. I mean, this is Intel. This is a thick stock, Joel. Like, what, I was messaging you last night, was with 52. I was like, is this for real? I mean, Jim Cramer and it wasn't even like it was a feature. He was just talking about it and talked about 3 or 4 other stocks with it too. But he says the one you got to buy out of all these stocks is Intel. As soon as he said that, they're lifting offers left, right, and center. And it continues. I mean, it's already traded a ton of stock. So a lot of times these rallies, you would see this happen, and they would give it right back because real institutional money comes in and knocks it back down. That institutional money isn't coming back and knocking it down. It's already traded 161,000 shares. It's continuing to go higher here in the pre-market. It's now at 52.40. So if you're fading these moves, you get burned too.
Where'd you end up covering that? Because we were online and
and you know what? I've still got a little piece of it, but I started shorting because I was like, this is silly, and I started shorting 52, and I was wrong. It was 52.20. So I ended up, and it's not coming in. So you're wrong when it starts going against you. So I covered some at 52.07. Some at 52.10. Thank goodness I did. And so I just got a little piece left because it's continuing to go higher. Is it going to continue? Probably. I mean, now you have coincidental news here that probably isn't that bad for Intel either. I mean, here you've got the Broadcom saga with Qualcomm coming to an end, which is a whole nother rant I could have. I mean, I don't even understand this anymore. So Trump could come in and just say, you're never, ever buying them again. I didn't, first of all, know he had that much power. So what did Trump say? This was a presidential decree that AVGO cannot buy Qualcomm. I've never even seen something like that before.
Well, no, he's blocked other deals before. The difference is
before the deal.
Okay,
there's not even a deal done.
Let me finish.
You're not allowed to talk to Qualcomm anymore. You're not allowed to talk to their shareholders. It's crazy. What world are we in right now?
Yeah.
What happened to free markets?
Right. That's the difference, is that this wasn't quite a deal yet. But this is not the first time the president has interfered. Just 2 months ago, right? 3 months ago, Alibaba and financial, right? I mean, that deal got the kibosh, and so this isn't the first time in this administration that this has happened. It just seems like foreign influence. It just seems like they're fighting foreign influence in American companies, and like it or not, that's the way it is. That's the way it is.
They're fighting it so much, though. I mean, is there not going to be repercussions here?
I don't know.
So if I think if U.S. company goes over and buys, a company over in Singapore or somewhere, I don't know if there is any over there. Maybe their administration's going to block it. I mean, one thing to block it, but there's not even a deal done yet. I mean, it's still just talking to share. They want to just go to shareholders, and everybody saying, no, you can't talk to Qualcomm. I don't know why we have to protect Qualcomm that much. I mean, I guess he said it was what was the excuse? It was
national security. So remember
national.
last week, CFIUS, right, the Committee for Foreign Investment in the U.S. said that they're going to be looking into it to determine if there are potentially national security concerns. Well, that was like the heads up, and then this week is Trump, saying, "Oh yeah, I'm with you on that." So.
To answer Texas Linda's question about Netflix going back, whether or not it's going back down, look at yesterday's low. If it doesn't take out yesterday's low in a jiffy at 1860 and then take out the double bottom at the 1430 area, then I think this one's going higher. So keep an eye on yesterday's low, and then also that double bottom. What would that be from Thursday and Friday? Or no, that would be Wednesday and Thursday at 1455 and 1413.
Jump over to that Broadcom. So we didn't talk about the charts here, and Qualcomm got absolutely annihilated on there. And maybe that's why I'm upset too, because I'm a QCOM shareholder. Here he's working to protect me, and now he blocks the deal forever. I didn't see that one coming. That was this. But anyway, so it looks like no deal is ever going to happen now here between AVGO and Qualcomm, at least if that presidential decree holds. So it's kind of what I said. I saw 2 to 3 points of downside if the deal doesn't go through. And obviously there was 20 points upside. So I still like the risk return when I was buying this thing at $63. I'm down 3 points in it now. So now question is, what do you do now? And I'm probably going to stick with this because, first of all, I was buying it saying I said this on the show multiple times over the last little while. I think Qualcomm could have been at $60 without this deal. So it's got a good dividend, 3.78%. They've got the 5G stuff. You've got value tech back in favor here. I don't totally think the deal may be dead. So you got that wild card that's off the table. So it makes sense that it's down here, but I don't mind owning Qualcomm at $60 here, just from a value tech perspective.
And you know what? Another thing here, since we're focusing on conspiracy theories here, how about this thing never getting anywhere near the takeout price? How can you be that comfortable selling the daylights out of a stock at 64, 65, 66, 67 when it got up there? If there's a price, if there's a deal out there for 83, I mean, maybe the people selling it or, knew that POTUS was going to knock this down either way, and that's a pretty.
I mean, he could have speculated that, so the speculation was correct. Obviously, I mean, there was obvious the market was pricing in that there was little likelihood this deal was going to go through because you're not going to see a stock trade at $63 with a potential 82 bid on the table. Yeah. So it was the wild card, and we talked about that on the show. We were saying, this isn't imminent. This is a wild card, a lottery ticket. The only thing I was saying is, I think there's value here at $60, even $61 here. And you know what? I don't think Qualcomm's going back to 50. So if you're shorting it here this morning, thinking it's going to get us all back, the market has turned in the last 3-4 months since this deal was originally announced. And value tech is back in favor. So they got the 5G stuff. They got some decent stuff going on their own. I think Qualcomm is a good deal here, honestly. So that's why I'm sticking with it.
All right, let's cover some earnings, and let's start with Dick's Sporting Goods here, traded down 226. A miss or bad guidance, Spencer?
The Dick's numbers: Q4 adjusted EPS of $1.22 versus $1.20 estimate sales, $2.66 billion versus $2.73 billion. So a mixed report. Fiscal year EPS guidance coming in higher, $2.80 to $3 versus a $2.77 estimate. The thing is, they're no longer going to be providing quarterly guidance.
These retailers are tough because you have some that have held on very well, like a Kohl's, and you can look even at Macy's. You can look at a few of those other ones that have held up. Well, then you have other ones like L Brands that have given it all back. So it's like pick your poison here. Some are good. Some haven't went down much. I mean, retailers have not been in favor in the last couple of months. They've given back a lot of those gains that we had in November and December and January. But, some of them have given it all back. Even like a Foot Locker or something. Well, I guess Foot Locker has come back up. I saw it in the 30s. It's back in the 40s. But I don't know. I don't know if you can just jump in here and say, okay, yeah, the retail, everything's bouncing back. Let's BTFD this thing, and it's going to work out. Because it wasn't that much in favor before. So it's one thing, like we had, obviously, yesterday on the show, we had our guest talking about buying BTFD and buying the dip, and that's how he was approaching this market. Just stock misses come in, and buy the stock because it's going to bounce right back. But he was also, picky and choosy with the stocks he was doing that with. I'm not sure the retail stocks are the stocks that, I'd be comfortable doing that with. The tech stocks, yes. It seems like the tech stocks keep bouncing back. That's what's really in favor. It's really been driving the market. Not sure about the retailers because some do bounce back and some do not. So it's kind of like Russian roulette a bit.
Pre-market low is in a 29 handle here. You had a pre-market low coming in at 29 even, right on the nose here. But we bounced $1.30. So a little bit of buyer's remorse here on that 29 low. What I'm looking at here is this little low that you had. You had a low at $30, and that was on March 2nd. That was enough for a rally to send it over $33. We're still trading above 30, so that's a big low there. You also had a low in that area at 30.18. So kind of see what happens in this lower $30 handle. If not, you really not much to hang your hat on until you see that low from February 6th at 28.86, coming back on the upside on a day like this when you have a big gap down. You wonder if you can get to the bottom of yesterday's range, and that's 32.11. So that's $2 away. So there's some levels for you in Dick's Sporting Goods. We still agree their stores are just way too big.
I think so. And that problem is still there. And when you really put it in perspective, yes, it's been a nice rally since $24, but yes, the stock was $60 at the beginning of 2017. And I agree. I think all of these stores, a lot of them are way too big. They're still the same problems. A lot of these companies are still getting Amazon, even though they've had some relief rallies and maybe they were oversold, but not sure I want to stick them in my investment portfolio long term. Short term, there's always trading opportunities.
Never had retailers. I've never traded. I've never had any retailers in any of my portfolios.
I have. Kohl's is the one I've always liked, and I wish I would have bought it back when I was talking about it was 38 or 40. I've had a few of them before. I don't really have any of them in there now, just because a lot of the good ones have already run, and the bad ones are the bad ones. So that's why I've been staying away. That being said, Spinner bringing up a good point. Credit Suisse has initiated coverage on basically every retail stock that is out there. The majority of the coverage that they just initiated last night is outperformed. So I can just run down the list if you want. So they started outperform PVH, Michael Kors, KRS, Burlington Cofactory, BURL, Lululemon, the Canadian company Goose, GOOS, Kohl's, KSS, Estee Lauder, ULTA, Ferrari, which is the stock we haven't talked about for a while, which is an awesome ticker symbol of RACE, RACE, Ralph Lauren, Ross Stores, Tiffany's, Foot Locker, TPR, Nike, VF Corp. The only underperforms that I saw in the note, and you can correct me if I'm wrong here, Spencer, Finish Line, which I am short, and JC Penney are the two that they put an underperform on. So Credit Suisse very bullish, these retailers overall. Did I miss any there, Spencer? I think I got them all.
I think you got them all too, but there were a lot. I think you got them all. This is from last night, right?
This last night, yeah. Maybe around like just after the close, about 4. Well, that's what they do. They usually, they issue these notes after the bell or before the market opens, somewhere in there. Just after the bell, the CS note came out, and a lot of these stocks are up slightly here in the pre-market. These aren't upgrades; these are initiations, so they don't have quite as much influence. But still, when you start them out outperform, they often trade up.
There are also a couple of neutrals.
Kors is trading slightly up. Lululemon is trading, or it was, but it's not now. Kohl's was trading slightly up, although it is ex-dividend today to consider. So some of these stocks could get a bit.
There were some neutrals too. Everything was outperformed except for the two you mentioned, JCPenney and Finish Line. And then the neutrals were Macy's, Nordstrom, TJX, Gap, L Brands, Under Armour, and Hanes Brands. And everything else, like the entire rest of the sector, was just outperformed. So
yeah. So lots of commentary there from Credit Suisse on your retailers. So watch that today and make sure if you're trading any of those, be aware whether they were bullish or bearish on it, but most of them, they were bullish.
Dennis, 2 minutes.
Yeah.
Do you want to get situated yet, or do you want to try and do one more earnings?
1 minute, quick here. You're right. The time is flying here because I had my rants. DSW was the other retail stock that reported here this morning. Spencer, give us the numbers.
DSW Q4 adjusted EPS 38 cents versus 27 cents. Sales 720 million versus 728.2. So they missed on the sales number, but they beat on the EPS. Mixed report.
Okay, I'm going to jump off. I'll let you guys handle this, and I will trade the CPI number because Joel's giving me a good heads up, even though I'm sick.
All right, DSW. Let's see, how long do I have here? I have a minute and a half. I got a long time here. DSW, a pre-market high, 20 even. Big bracket on that first initial move. You hit 20 even, and then you also hit 1860, and now you're trading down 18 cents here at 1942. Area of interest here is the 1980 area. Yesterday's high, 1980. I see a couple other highs at 19. Oh, I see like 4 or 5 other highs between 1966 and 1980. So you bust through there, you got a chance at the upside. Coming back on the downside, 1902. Oh man, this has been in a real range yesterday. I would call 1880, 1890 that major support, because you've had your last 5 lows between 1879 and 1914. So 19 to 1980, and that's pretty much been your trading range over the last 5 sessions. S&Ps have begun to leak here ahead of the number. We did get up to 96 even, still trading up $4 here at 27.93. Your pre-market low is 86 and a quarter. Mid-range on the session comes in at 91 and a quarter. Let's see if the Fed knows what they're doing here as far as raising interest rates and at the appropriate speed in order to keep up with inflation. Here we go. Spencer, what do you got for us?
Well, I got the estimate first. Estimate consensus was 0.2. Prior reading was 0.3. Looking at the current number, do we have it? 0.2. It is. There we go. All righty. 0.2 in February. That was the estimate. Again, prior was 0.5. Excuse me. That was CPI. And then so we're in line. We're in line.
Oh, boy, look at that. Rocket ship here. They like the Fed is doing everything right here. SPOOs had a small dip, a small pause, and now it is off to the races. We just hit 2,800.75. Yesterday's high is up at 05 and a quarter, trading at 2,800. So it gets a soft number. So the Fed maybe will only go 2-3 more times on the year instead of 4, which some people were worried about. But nice pop here. And even the financials here are even getting a pop. Bank of America trading at $33, up 16 cents. That may be a new high for the move on Bank of America. Let's see where BAC. I thought I'd seen highs at the 32.80. Yep. New high for the move in Bank of America. So even though it's a little bit of a soft number, it's still giving some bidding to the banks here. Goldman's up 42 cents. Really a lot of green on the screen here. As the SPOOs are now quickly above 2,800. It's funny, they paused for a second and then they loved it. And market is really having a nice rip here. Just printed 03 and a quarter. We are looking for yesterday's high at 05 and a quarter. After that, folks, nothing. I mean, absolutely nothing until your February 2nd high of 28.35. 03.75 is your current high. Spencer, any other news on that? I mean,
no, I mean, that was it. The core CPI again, 0.2. That was in line. Total CPI still 0.2, which was in line. So everything was pretty much in line here. I have a question though. Why does Bank of America tend to move more on these numbers than like the rest of the banks?
I would say that, well, first of all, it's a very liquid stock. So even if you're trading in the pre-market, there's good liquidity there. If you just kind of want to go with the market flow, if you're not trading the spiders and the S&Ps. And also it's very high ranked in the S&P 500 index. So if the index is going higher, all your index funds are going to have to buy it too in order to, correlate their portfolios, correlate their portfolios with what the futures are doing. We just got up to 05 and a quarter or 04 and a quarter, just missing Monday's high of 05 and a quarter. So we'll be keeping an eye on that. What time we got here? It's 8:33. I'm sure Dennis is still banging things out here. If you guys want to call Nick a little bit early?
We can call Nick a little
bit early. Let Dennis make some money there.
I hope so. He's he's sick, so I don't know how he's doing there.
He was aggressive. Let's see how Netflix is doing here. Netflix and FLX. Just curious. Oh, that's trading up 258 on 50,000 shares. We are dialing Nick Chahine. He's a
happy CPI day.
So Nick, decent soft number, right? Pretty much.
Well, it's as expected. So we get the relief pop that it's nothing bad. Right, because on 2.5 we had inflation implication from a strong jobs report, and here was the expectation of maybe we'll have another shoot or drop here directly from the CPI itself, but it didn't happen this morning, so everybody's happy.
And isn't it funny the way they reacted differently to the two unemployment numbers? Last month, hot number, wage inflation. Oh, that's horrible. And then the number that comes out in was it last week? Oh, that's a great number. Everyone's making more money. It's great for the economy. It's funny how they could kind of paint the brush, with the color they wanted, based on the positions in the market. But if you get away from all this, Nick, and you just forget about the CPI and the PPI, you stick to like the pure fundamentals here and supporting it with the technicals. I mean, what's changed in when we had that big sell-off? Good earnings reports and everything. Drill down on the fundamentals for us.
Yeah, nothing has changed, and my story because we talk about that often, you and me. So I kept my message was hunker down, this too shall pass, and that's why I said the bottom happened when it happened on the 9th. And everybody now wants to see a retest and all that. But where's the reason why? I mean, fundamentals, I think, overrule technicals. Headlines overrule everything in the short term. But these headlines were strictly sentimental. So the only thing that changed was sentiment flip. And it flipped back and forth, back and forth, back and forth. And it just causes people to trade based on what they feel rather than what is truth. Like I've gotten into a few debates recently on, this bullish market is crap and it's bloated. And I'm thinking, I keep offering this easy explanation. Where is the bloat in Apple? So if Apple represents the market or the biggest thing in the market, it trades at 18 PE or whatever it is. And this is on trailing PE. It's not like it's trading on future hope. So this is just one example. There are some bloatage out there. I'm sure you can find them. But in general, the meat is not bloated. Google at whatever it is, 40, 50, 30 PE, Facebook at that. So I can mathematically argue against that by saying more than half the NASDAQ are these handful of companies, and they're not bloated. You can argue that Amazon is bloated, but it's delivering growth. And until that stops, it's not bloated from a growth company perspective. So, yeah.
All right, Nick, this is going to be ticker day here. And
all right, let's go.
All right. And this one, I like this setup here. This one is coming from Downward Dog, our yoga guy in the chat. He wants to know what you think of CMI, and I believe that's Cummins. Yeah. I mean, I before Nick says anything, I mean, this thing is knocking on the door here of a breakout. We are trading at 160.06, but if this thing can get above 163.5, 164, I see a nice breakout. What do you see in CMI, Nick?
Whoa, I think we're looking at different charts. No, I'm just kidding. So yeah, I see a really tight situation where the range has gone from really high to bumping along a neckline. So hopefully that neckline holds. I know Caterpillar was under pressure and they sometimes trade in tandem, although, they're not going in the same direction. I don't know the fundamentals of CMI. I know my son would like a Cummins engine in one of his trucks, but so technically it's tight and something's going to give. So if you expect that the markets are going to crawl higher and this one doesn't have any specific bad news, higher is likelihood. The lotto I would play. And I could do it via debit call spread at the money, so I don't have to risk a lot for a chance to double my money. And I will use time, put time on the clock, meaning I don't do next week's contracts.
Going out.
I go out in time.
Going out in time. Ed Parker, good question for Saint Nick. Sell puts in Qualcomm today. We get nicknames for everybody on our show. Saint Nick, I call you Tricky Nicky, but what do you think about selling puts in Qualcomm today.
I could do that, in fact, because today will at least give us a reprieve from silly headlines, right? And the way I would do it, I would have to step out in time, back in time as far as charts. I can't do it just based on the daily. So Qualcomm put ideas. If I'm willing to own the shares, I think I can find something at 50 or below 50 for the next few months where I can sell. And if I get put to stock, it's not a big deal. So on the monthly chart, you can see the support, but I think you can find a dip last year. And actually in 2016, that was the bottom of the market. So 50-ish area, I think I can find premium there.
Okay. All right. So we got Qualcomm, we got CMI. Ed Parker here is long Boeing. I know you were banging the table on Boeing a couple of weeks ago. I had that big dip down. It's looking kind of tired here. I'll tell you right now, I'll just do my quick technical analysis. 355. That seems to be the big level on the upside, but we're $9 away from that. Why is Boeing losing its air?
Well, yesterday it took a $10 dip, so that would be the reason it's losing its air. But if we know anything about Boeing, is that every dip is bought by the markets. So the bad thing about it is the trajectory is so high that it scares people out, and it's acting like a momentum stock, and it shouldn't be, but it is. So I buy the dips by selling puts. I did sell naked puts against the dips, and they paid. And I flipped. I tried another round, and they were credit put spreads, and I believe some expired this week for pennies. So I'm going to look at it today. I haven't checked to see if it's up or down. If it is down again, I'll probably close my profits there and let it sit for a little bit. But I'm not buying upside hopium. I'm betting on downside support. So that's how I'm trading Boeing. This is a company where fears on tariffs dropped it severely because they thought it was going to hurt sales. But for all I know about it is that it has a backlog of sales for a decade. So I don't think it's going to hurt sales.
All right. This is a new stock. I don't even know if we've ever talked about it on this show here. And this is coming from Rob Hood, VECO. VECO Instruments, another Rob Hood chart here. Not a big mover, trying to knock on the door. I'd like to see it clear double. Oh, that double top is not up. Now, there's nothing major here, Nick. What are you seeing in VECO?
What's it doing today?
It's flat. It's flat at 20 and a quarter.
Oh, okay.
I don't hang you out to dry anymore. Nick.
Technically, it's in a breakout on a daily perspective. So 22 might be the next test, but I've never heard of it. So I'm just looking at the chart. VECO, and it looks like they won it. Yesterday's candle was pretty important where it closed. So if so, look to the left, and there is the ledge at 22 where, it took a big dip down to it, tried to hold on for a couple of candles. It failed, tried to recover it. It failed miserably in October, late October of last year. And here it is climbing its way back to it. So if this breakout holds, 22 would be the target where I'd say, thanks for the profits, and I'm out.
All right. I can't feel my Facebook has been pounding the table on overstock.com, OSTK. And that stock had a big run, and and I don't know if you can really help out. I know you can give a help on the technicals. Anyone have a guess what Overstock would sell e-commerce for? I think that's a portion of their business. He thinks it's worth $70 without T0, but with opinions. Nick, anything on, and just real quick, no, S&P's missed Monday's high by a tick, folks. 05 and a quarter was yesterday's high. We just hit 05 even. We backed off 5 points. So, Nick, comments on overstock.com.
Overstock is my proxy for Bitcoin. That's all I use Overstock for. If you put it against Bitcoin, it's a safe way, liquid way, easy way to play Bitcoin. So if you think Bitcoin is going to rally, then buy Overstock. Or bet on Overstock, I should say. So I used Square and Overstock for my proxy.
Brent? We just lost 10 points here in the S&Ps here. We got something going. Breaking news. What is it? Tillerson out as Secretary of State. Washington Post. Oh, my gosh. Folks, oh, man. it's always something with this administration. Now the Spoos are back on the lows of the session, 27.92. No, not the lows of the session. We just lost 10 points. Oh, man, Nick. I mean, this market is just so subject to news here. Let's see how Dennis is doing. Dennis, you doing okay there?
This is silly. The reaction is silly.
I had so much going on, guys. Keep talking stocks. There's just crazy volatility here.
Here's the thing. When Cohen's news came out, now I tweeted jokingly, but I really meant it. I said, so who knew that the United States future centered on one dude who is not even the president? And I said, if you go down to the street and say Cohen left, they'll say, who's Cohen? They say, well, you say his post, and 99% of the people wouldn't know what the post does, let alone what who the guy is. So this too shall pass. So eventually Tillerson is out. They'll start talking about some other guy or girl that's going to come in, and people will love it.
All right. Now you talk about an eye for the market, man. I saw the Spoon. I just was looking for news somewhere. And then we got it there. Going back,
I'm holding calls, and I was happy. Now I'm a little less happy.
You're like, Nick's gonna hang up the phone on us and try and get out of some stuff. I just want to talk about Overstock for a second here. And boy, I read an article, Patrick Byrne, talking about his T0 and how it's going to replace stocks. And so to me, I mean, I don't know how much of the value of the company is tied to that, but I think that guy is just totally nuts. There's just no way that whatever platform that he's creating with this T0, does he even understand the complexities of clearing and trading and everything in order to, it's not perfect. It's T+3. It'd be great if it could be, same day clearing or whatever. But just the fact that this guy is talking about some kind of platform, T0, that he's creating is going to replace, stock trading, to me, and I know you're using it as a proxy for Bitcoin, to me, the guy's totally nuts, and I don't want to have any.
I thought the whole thing was nuts from the beginning, but price is proof. And for this purpose, people are saying, "How can I do Bitcoin?" I did try to play Bitcoin, but the platforms were too busy for me, and now they're chasing me. I get emails every day from platforms where I tried to open an account and something got hung up. Hey, we're ready to get you on board. We're ready, and it's like, yeah, whatever. I moved on. So. Back to Overstock, it is tight. Did I post a chart? I don't know. It is tight, technically tight. So something's got to give, and it'll follow Bitcoin to a degree. And then so if Bitcoin is down 10%, I've seen Overstock be down like 1%. So it's a little bit safer way, but the direction will be hand in hand for now. So here's the chart if I haven't.
Okay. All right. Boy, we're all over the place.
That's good. That's happy. I'm looking at bonds and they're popping, and I bought calls yesterday on that. So.
All right, Nick, we are all over the place here, but you're good at keeping up with me here. Angie, baby, she wants to know if we've talked to Amazon already, and we haven't. And just buy Amazon, right?
Yeah, right. Here's one thing I can give advice to everybody: don't short Amazon. From the perspective of selling a short stock, versus puts. So Amazon is the ultimate growth company. It's actually the ultimate startup company. It's still a startup. People laugh at me when I say it, but it is a startup. It starts up businesses every year. And until that stops, you cannot short it. I said it'll be 2,000 by the end of the year, or within the next few months.
Who did that? Was it Gene Munster that was on? That was that was your question for him. I remember you asking about that, but unbelievable. Talk about your TLT trade here, and with this number, the TLT is looking good. Talk about your setup and what you're looking for in this one.
Well, it was kind of a blend of technicals / fundamentals / hedge on markets. Historically, stocks and bonds move in opposite directions. So I am long calls, profitable calls. So I didn't trim. I trimmed some, but I resituated some. So in the Dow, because it was lagging yesterday, and I was hoping the financials will catch up again today. But in order to hedge my bet, I just posted a chart at the TLT where the situation was tight and something's got to give, either an upside or a downside. And I felt like the upside potential is a lot bigger than the downside. So even if it does dip a little bit, it'll eventually break out. So I bought calls out in time. And I did buy naked calls in the intent of spreading them, meaning if it moves my way, then I can lock in some profits by selling some higher or diagonals against them. But for now, they are long calls. And, this is a fickle thing that moves up and down. So it was kind of a bet on a breakout and somewhat of a hedge on stocks. So I thought it was a perfect trade to put yesterday.
All right, Nick, I want to talk to you. Dick's Sporting Goods now a couple bucks off its low. Not the greatest report, traded down a $1.46. Tell us what you think of this retailer. Spoo's right back in the $2,800 handle. Nick,
BTFD.
Well, it's not so much BTFD, but
what do you mean it's not so much stuff?
It isn't.
What do you mean it's not so much BTFD?
Well,
it's all BTFD.
No, it's sell the news. And it was wrong to sell the news. Tillerson out doesn't change the game.
Well, the BTFD guy wins, though.
There was no dip. It was sell the rally.
Yep.
It was a rip. It was a rip.
That's the dips now.
The rip is a dip?
That's all you get. You get 8-point dip. That's what you get. That was the pullback.
No.
Now we're off. Now we're just off the races again.
A dip was 2,500 and change in early February. That was the dip.
I know. I missed that one.
Yeah. So, okay. Back to the question. Dick's Sporting Goods. I didn't think it was expensive. I think the PE is in the teens. So I'm not a fan of retail. They did surprise me. They held up better than I expected, at least from the perception is concerned. So if I wanted to trade Dick's Sporting Goods, I have to say the whole name. I just can't say the one word. It just sounds weird. And I could maybe, if I wanted to own it, sell puts or put spreads against the dip. But I don't know enough about the fundamentals to say, yes, I can bank on it. So, but it is not bloated. So if somebody wants to catch it, but where is it at now? 20.
It made a low at 20 and under $30, and now it's up at 31 and a quarter.
So the only thing I would worry about technically is there is a potential of not a head and shoulder, but there's a neckline it needs to hold somewhere around 29, and if it does lose that, it could invite some potential momentum sellers. And so I would avoid. I would just be cautious. It's not a forecast, but it's something I have to fret.
All right, Nick.
Let's talk one. I got a stock for you. Everybody else give a tickers. What about Micron? MU? It's up another $2.50 because Kramer pumped it yesterday. I mean, everybody has jumped on this bandwagon. Thing broke out from 50, and in like 3 days is $62. I mean, this thing is just off to the races here. Is there a pullback to be had? Is this one you got to chase? I mean, this is just a rocket ship mode.
Okay, let me share a chart with you on MU. First of all, MU, if you're not on board, you missed the move. That's what I would say to myself. But this is a long-term breakout in the making, and it's just reaching my target right now. So if I'm not long, I don't jump long in right now because it's just a momentum that is insane, and I just can't do it personally. And if I'm long, I would trim and replace. If I'm long the stock, I may want to sell the stock and replace it with upside calls out in time so that the profits are in my pockets and I'm still long the stock, only with a lot less risk. That would be my way of doing things. If I'm looking for an entry point, I'd just sit out and wait. I would put it in the category of, oh, I missed it, I'll catch the next one.
And there's a lot of stocks you could talk this about, a similar chart. I mean, Square has blasted off into orbit. SQ had a nice 2-month pullback on it, and it's gone now too. I mean, there's, you could even say Amazon, which we've already talked here. I mean, there's probably about half your tech stocks, which are similar. They've just blasted off here. So you would say maybe wait for the next pullback here?
Move on to something else. I could find better deals somewhere else that are just as compelling. So it depends. If that's the only stock you got to trade and you want to put your money to work, fine. But it's not me. So I like to find, I don't have edge. I'm just joining the herd at this point. So if I don't have edge, I'm just hoping a lot. Yeah. On Square, when it fell, I knew it would rebound, so I sold puts in it. So I knew it was going to happen. At least in Micron, if you saw the breakout coming, like that huge cup and handle that developed over months, decades, I should say, and you bought calls in it or bought the shares, yes. So you have edge, you have a thesis you're working with. But here, what's your thesis? Let's join the herd. Yeah, exactly. You end up buying Nigerians' profits.
All right.
So.
All right. Let's get a couple quick ones in here, and then I'm going to finish with one that you really helped me out on. Let's go to AMD.
Oh, by the way, thanks a lot for US Steel.
That's what I was going to ask you about. Did you go with me on that one or not?
Well, you said short it, right?
Yep.
I did buy puts. Didn't it announce an upside surprise yesterday of sorts? What's the stock doing?
They had guidance. There's multiple things. Guidance had it up, but then Vertical Research just came out with
Johnson.
Just before I actually shorted it, Vertical Research came out with a sell. Price target $22. So that just pulled the rug out from under it. It was trading up on the guidance, and then they came out with a $22 price target that all the upside is priced in.
So I'm making money. You're telling me I'm making money.
You're up $1.30 right now. It's down another 40.
It's 42.
Market's up, X is not. It's down another 3%.
But I want to tell you how Nick helped me on this. It broke down through my support level, and I'm like, okay, I don't want to miss the boat. This is breaking support. And he convinced me to go out. Not only I went out all the way to April on this one, Dennis. And so I went out to April, and then I said to myself, you know what? It's going to test that old support. So I put on a tranche, after it broke the support, and then it came back to it. I put down another tranche, and then I saw the news after the close yesterday, and I'm like, I'm dead meat. And then Gordon Johnson comes to the rescue, downgrades it from a hold to sell. To me, I mean, they run this thing up at all the, the tariffs and everything. I mean, how much more upside? I also was thinking about selling some calls in this thing too, or selling some call spreads. But we'll see what happens today. It's trading in the red, Nick. So down $1.17. I gave you something good.
Well, I owe you a fruit basket, a small one, because I only bought a few puts naked out in time too. I can't remember the time. I have to
AMD.
Check
did you finish your AMD?
Yeah, I posted AMD, and AMD is also in a multi-month breakout. And this is one where I've sold puts against dips. So when it falls, I sell puts against it. But right now, the problem is that the whole sector, because of Micron, for example, is so hot that any hiccup there will hit this one just as hard, and this one is not as happy as the other one.
It's been responding to it. Nick, just one more thing. I keep saying one more thing. Stock replacement strategy. Rob Hood says, let's do an example in Western Digital here real quick. WDC, full disclosure. That's one of my good ones. I have trading at 103.29. 1, 2, 3, 4, 5, 8 day in a row uptrend. I'm going to get nervous here. Stock replacement strategy here. And then get an XHB chart ready too. And then we're really going to let you go.
Okay, so stock replacement, the idea is that you have profits in the stock that has run up quite a bit, and you want to take some off the table, but you want to stay long the shares one way or another. So what I do is I would sell my shares, pocket the money, so now the profits are in my pockets. And what I can do is I can turn around and buy a long dated in the money or at the money call. So I'm still participating to the upside. The calls will cost a fraction of the actual the shares themselves. And if your thesis is correct, then you continue to profit as the stock moves higher. You can do that with a debit call spread, which would be a hedged position, because if I buy calls and we have 2-3 days of straight down pricing, the calls would deflate in value.
Okay, and the housing index,
XHB.
Yeah, boy, that's a tongue twister.
Yeah, XHB is, I'm not, I wouldn't buy a house right now because I feel like they've come so fast, and I feel like the real estate professionals always tell me that there's no inventory, and I just don't believe it. I just look around the place. If I wanted to buy a house, I could find a house, knock on the door, and kind of convince the people to buy from them, but that's not how things work. So I feel like it's a manipulated message, and so XHB itself is just tracking price action. So I don't have higher rates might incite people to jump in and buy or upgrade houses or refinance. I don't have edge on it. So on dips, maybe I sell puts, but
43. You need to clear that $43 area in that index. All right, Nick, this might be a record for keeping you on the show. I hope you're not.
Hey, I'd stay the whole time if you want to keep me here.
Okay, we've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. Always willing to help traders out, give good advice on trading the options market. Nick, we are going to let you go and have a good day. We'll speak to you soon.
This was a fun show. Thanks.
All right. Dennis, some crazy trading action there. You had the rally, then the break on Tillerson. Was there any things that caught your attention?
Only thing running is my nose, Joel. I got to keep wiping it here, but I got to turn around. Or that's what's running here. But yeah, you know what? I was just the chop. I was just playing the chop a little bit. I've been in and out of a bunch of stocks here, just basically trading SPY, trading IWM, trading Qs, just playing the chop a little bit. Had a couple nice little trades while we were talking to Nick there. But overall, it's a difficult market. It's when you got headline risk like that, boom, here. And this is one thing too. There's just so much headline risk for a number of things, but the political risk here coming out is starting to get concerning as well. But the market shrugs everything off. So when you see the market pull back, Tillerson's out, pulls back 8 points. Everybody's just screaming to buy the dip, and they did it again, and we're right back up. Like these dips last like 5 minutes, Joel. They used to last 5 days or 5 weeks. They last 5 minutes, and people are scrambling to get back in. So I think you're going to lose your bet here today. I mean, it's close here now. I know Joel, he tried to block it up there, 279.91. That's where we got to yesterday. 280 loses a steak dinner, but I missed by 9 cents yesterday. I think you're going to lose it here today, though. Hoping you're going to lose it here today.
Okay. All right.
It's 9 a.m. Before we let Dennis go and go to our next guest, Dennis, was there any notable imbalances that you've seen, or did they even not matter today?
Well, General Electric, 194,000 to sell. We didn't talk. I'm dying here, buddy. We did talk GE here today, but they, JP Morgan, lowering the price target to $11. That's your catalyst. That's why GE is down. I'm getting burned on that here again, too, because I liked it. I said it yesterday. I bought it overnight for a couple of days just for overnight trades because it was starting to look decent technically. But I warned everybody, even when I was doing that myself, I warned everybody that this is headline risk. The headline risk is the company says something bad, which they seem to always do, or an analyst says something bad, which they seem to always do. And that's what you're getting here today is JP Morgan lowering their price target to $11. It seems like there's, always something negative to say about GE.
All right. That's it for Dennis. We're going to let Dennis go. We're going to take a quick break and grab our next guest, Gil Beyda. He's the managing director of Comcast Ventures. They just made a couple of blockchain investments. So we'll be right back with Gil. Welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin. We are on now. Gil Beyda. He's the head of Comcast Ventures. They've just made a couple of blockchain investments, so we're going to talk to Gil about that. Gil, how's it going today?
It's going great. Thanks for having me on.
You had mentioned in January, I'd read an article on TechCrunch that you had said that you guys are going to be doubling down on blockchain this year. So you've already made a couple investments, blockchain-related investments. Can you talk a little bit about what those were?
Yeah, so we're doubling down. We think that there's some incredible opportunity with blockchain. It's a seminal technology that has the power to create new business models that haven't been invented before. And so we're super positive about it. We've made 3 investments. One is in a fund called Blockchain, which makes direct investments into ICOs. Another investment that we made was in an accelerator, a blockchain seed stage accelerator called MState. And then very recently, we invested in a direct investment in Blockdaemon, which is a blockchain as a service infrastructure company.
So with all these, new blockchain companies, it's a new technology, it's a new industry. How do you go about, you and your team, I guess, how do you go about separating the companies with actual viable business models and then the ones that don't have that?
We are in uncharted territory here. So in the venture community, back in sort of the 80s and 90s, we used discounted cash flow to figure out how to value these companies. Then in the 2000s, we had companies that were aggregating audiences and eyeballs. And so we had to figure out new valuation models there and came up with something called sort of the attention index. And now we're in a new world here where companies are inventing whole economies. And we're trying to figure out, how do you value an economy? What is the utility? What is the value that's being created? How large is this economy? So we're in uncharted territory, and that's why we're making a number of investments, not only because we think these are great opportunities, but also to learn.
What is you work for Comcast Ventures, the venture arm of Comcast. What is Comcast plan with these companies?
So part of our job at Comcast Ventures is to interface with the various different business units and understand, what are their needs, what are some of the projects that they're working on, and there are a number of them going on internally around Internet of Things, security, identity, advertising, rewards and loyalty. So there are a number of internal projects. Our job is to understand those and then to use that to help create our vision for the world from the ventures group, and then go out and find companies that will be great investments. So we're an optionally strategic fund. So companies we invest in don't have to have anything to do with Comcast or NBC Universal, but if there's an opportunity to connect some of our portfolio companies with some initiatives that are happening internally to help accelerate those, then even better.
So the focus here is it's as much about investing and giving them capital as it is incorporating them into the bigger picture. Those are equally important, you would say?
Yes, yeah, absolutely. So first and foremost, we're financially driven. So we're looking for companies that can be great, be big, have great exits eventually. And then secondarily, if there's an opportunity with Comcast or NBC Universal, then even better.
One question for you here. Comcast has a lot of cash on their balance sheet, right? And with all their assets, they're making this move into blockchain. I don't know if you could give the exact percentages, but how much of of cash or how much of a commitment are they making to this blockchain investments? And like any investment, where's your uncle point? Because there's a lot of people, blockchain, it had a tremendous run from single digits, triple digits, up to 20,000. Now it's just seemingly dead money here at 9,000. Not to say, the technology moving forward, but how much of a commitment has Comcast made to it, and how long are they willing to go with it?
We're in it for the long term. We think that blockchain technology has a lot of potential to accelerate some internal efforts. Also has the opportunity to disrupt existing business models and create new business models. And we're looking at it as a long-term investment strategy, irrespective of where Bitcoin is, whether it's at 10,000 or $10. I know some of your viewers don't necessarily want to hear that, but for us, that's a distraction. We're investing in the fundamental technology, and look at it as an opportunity for us to understand the potential for the technology while investing in great companies.
Do you have a time horizon for when these investments could, pay off on the balance sheet?
It's tough to say. It's still early. We're still understanding the fundamental technology. The platforms, whether it's blockchain, whether it's Ethereum, are still themselves under development. And also, then the layer on top of that, which is the utility layer, and on top of that, the application layer. It's still so early to tell. We know that there's a lot of potential there. If you look at Internet 1.0, was all about reducing the distribution costs and connecting buyers and sellers, producers and consumers in a frictionless environment. We think that blockchain has an opportunity for making those connections in a trusted environment, making an exchange of value, whether that's goods or services, media, some sort of e-commerce transaction, in a trusted environment between parties who have no previous relationship with each other.
Question here from our chat. What do you see now is the leading underlying blockchain token platform, being the scalability problems are deviating from the decentralized nature of everything? So what do you see as the leading underlying blockchain token platform?
Too early to tell. I think that for different applications, we're going to have potentially different blockchain infrastructure, different blockchain platforms. If we're going to need a totally different blockchain for high value, low volume transactions, and the reverse for low value, high volume transactions. And also potentially we need a different blockchain for storing a lot of data versus small amounts of data. So I think it will end up having probably a half dozen different platforms, each customized and configured for a particular application.
Another one here from our chat. We've been obviously following all the different companies that have been making blockchain related moves. A question: do you think Kodak will be a player in the blockchain environment?
I think that's an interesting foray into blockchain. Certainly Kodak is a 100-plus-year-old brand. I think the fact that they're embracing blockchain technology, I think speaks to the value of blockchain and a potential for introducing new business models. I think we'll see a lot of other companies coming into the blockchain, whether it's for financial transactions, whether it's for media, e-commerce. I think that the old internet, if you will, 1.0 required aggregators, folks in order to that would aggregate buyers and sellers, suppliers and producers, and create that trusted environment. Now with blockchain, the protocol itself creates that trust, and so those intermediaries, those aggregators are less necessary.
Do you see any applications in the blockchain technology for Comcast's, core businesses? The cable, the TV, the internet? Do you see any applications from blockchain technology?
Not sure just yet. There are a number of business units that are looking at the technology. As I mentioned, the Advanced Advertising Group has announced an initiative that creates a consortium around data matching for ad planning, analysis, and execution. So that was announced in partnership with Disney, Cox, Aris, and other media companies. That's a really interesting application where media companies are getting together, and rather than share data, they're actually creating a matching engine. So no data is actually shared amongst the companies, but they're able to reach scale for ad targeting, planning, and execution.
All right, last one, Gil, and I'll let you go. Safe to say you're not done yet? You have more in the pipeline?
Absolutely not. We are all in on blockchain. We think it's important technology, and we'll probably have some more investments to announce in the coming weeks.
Q1?
Hopefully, we'll see.
Okay. All right. Gil Beyda has been on the line with us, Managing Director of Comcast Ventures, a seasoned VC and entrepreneur. Gil, thank you so much for your time today. Really appreciate it.
With pleasure. Anytime. Have a great day.
All right. That is going to be it for us today, folks. One last look at the markets, Joel. Where are we at right now?
We're hanging in here.
Before we let people go.
We're hanging in here, 27.99 a quarter. Big number on the upside. We got to 05 and a quarter during the overnight session on Monday. 05 even is your high. That is the key to more continued upside. I'll be looking mid-range on the session here at 95.75, perhaps for a lower risk long entry. Above 05 and a quarter. Look out. Really, no major daily highs until 28.35.
All right, that's going to be it for us today, folks. If you want to catch any part of our show again, catch our podcast on iTunes, SoundCloud, and Stitcher, or just go to youtube.com/BenzingaTV. Thanks to our guests, Nick and Gil. Thanks to those of you who joined us on YouTube and at premarket.benzinga.com. Hope you all have a good rest of your day. We will see you folks on Wednesday.